Well, my next guest claims that shock and awe is needed within the Eurozone to stop its bond yields creeping ever higher. Eric Chaney is chief economist at Axa and has just written a commentary for Bloomberg. Eric, thank you very much for joining us today. Now, you've talked a little bit about the need for governance in this commentary today, and the idea that liquidity as a backstop isn't enough. You talk about Spain as being the place where this battle is going to be fought. Tell me how you think it may pan out.
Yeah, indeed. I think what we have seen so far in this rolling euro debt crisis, it's only skirmishes, because the countries which were facing difficulties were relatively small compared to the euro area. But the markets have some doubts about Spain. I don't think they are well-founded, but the markets have also doubts about the long-term sustainability of the euro. So Spain is likely to be the real battleground for what I call the Battle of Spain, which I think will be won by European policymakers if they do the right things, because Spain is a good place to fight this battle.
So tell me what the right things are, in your opinion, for Europe to win this battle.
Well, currently we have all these slight disagreements between the European Central Bank, which doesn't want to buy too many bonds, Germany, who is reluctant to extend the EFSF, etc., etc. Once the pressure coming from the market starts, I think that there needs to be, and there will be an agreement between the policymakers and the ECB to implement what I call a shock and awe strategy, to put 500 billion euros, to just give you a round number, to bail out Spain and Portugal, to put them out of the market until the end of 2012, which would leave enough time to complete the reform of the governance of the euro, which is the key
it's a
thing.
very early bailout you're really talking about, a bailout before Spain even really needs a bailout.
Well, you cannot do that if Spain doesn't ask for it, and
sure.
that is the game. But the markets will put so much pressure on Spain, I think, that Spain will have no other choice left than to ask for loans.
No, we've got this summit on the 11th of February. Is this a good time to see some of the beginning of this governance in place?
Well, look, I think the decision will come first from the markets. It's when the if is not really in question, when the markets will start putting a lot of pressure on Spanish spreads, that the policymakers will have to react. If they are prepared to do that, and in this regard, the next Council could be very important, but maybe it's going to be off-door discussions. If they are ready to implement it, it will work.
But tell me about the euro bonds, because there's been a lot of talk about those, and are they going to be something that shows the rest of the world that Europe is united?
In the long term, I think so, but it's extremely premature today, because euro bonds today, that would be nothing else than a transfer of credibility from Germany to weaker countries, which Germany doesn't want, and everyone understands that. In the long term, I think the markets will need to see something like a Eurobond, but it will have to be really safe. And I think it will have to be secured by tax receipts coming from every country in the euro area, so that investors will say, okay, that's a Eurobond, I'm pretty sure I will be paid back. This is good money.
OK. Eric Chaney, thank you very much indeed. And, of course, that full commentary is on the Bloomberg terminal.